So let's take a look at futures this morning. Remember, markets were closed for Good Friday, so we've had 3 days without trading. We are back open coming up in just about an hour from now. Futures, Dow Jones futures are down by 57, but the S&P and the NASDAQ are pointing higher, in particular on these reports of this potential peace plan, this 45-day ceasefire, the proposal anyway. If that happens, taking a look at oil right now, as you can see, Brent is at 108 and change. Crude, WTI, that's at 110. The U.S. and Iran reportedly are weighing a peace plan as the key Tuesday night deadline that has been set by President Trump is quickly approaching. The proposal calls for a ceasefire followed by a broader deal within 15 to 20 days. OPEC Plus agreeing to boost output by about 206,000 barrels a day in May. That signals that they're ready to ramp up production once the route, the Strait of Hormuz, opens, while warning that the conflict could have a lasting impact on supplies. Meanwhile, the oil shock hitting Asia first, with factories cutting output and fuel shortages emerging. The disruption creates a roughly 10% supply gap. That raises the risk for Europe and Africa next, according to the Wall Street Journal. I want to bring in SlateStone Wealth partner and chief market strategist Kenny Polcari. Kenny, economists are warning that the impact could last for months. What do you make of all of this, and in particular, what you're seeing in the market right now?
Well, look, it could last for months because we've been talking about this. The shutdown has created confusion everywhere, certainly in the Gulf states, certainly through the Strait of Hormuz. And like OPEC Plus said over the weekend, while they're willing to increase production in April the way they said, it's still going to be difficult to bring everyone back online again as they've shut down some of these facilities. So there will be a lingering effect. You know, depending on how long, it's going to depend on whether or not we get this ceasefire. I think the market is kind of leaning and betting towards this ceasefire is going to happen. So maybe we're going to start to see that, that the tankers move through the strait sooner rather than later. And that will certainly bring down some of that risk. But I do suspect it's going to kind of linger for a little bit.
How closely are you going to be watching President Trump's comments at 1 p.m. Eastern time?
You got to watch him very closely because, you got to watch everything he says and the tone at which he says it and kind of what he indicates is potentially going to happen. Right. I mean, the tweet yesterday kind of sent markets and people into a little bit of a tailspin. But then we'll see what he says today at 1 o'clock. It sounds to me, like you said, maybe we're getting closer to a ceasefire. And I think the markets would certainly appreciate that. You can see it kind of futures are right around the unchanged line as it tries to discern what he's going to say and what's going to happen.
Yeah, well, certainly we're going to be watching that. Everyone will be. I want to get to these comments this morning that are brand new from J.P. Morgan Chairman and CEO Jamie Dimon. So he strikes a cautious tone in his annual letter to shareholders, warning global conflicts and geopolitical risks are clouding his outlook. He points to Ukraine, Iran, and China, saying these crises could drive up oil prices, disrupt supply chains, and keep inflation elevated. He also warned Kenny that high asset prices and global uncertainty could pose risks if conditions deteriorate. What do you make of that?
I think he's 100% right? He's being cautious. He's just kind of laying it out there for people to take a breath. Don't go, don't think that everything's rosy. Even if this ceasefire happens, it's not necessarily going to clear up everything, right? We still have that ongoing Russia-Ukraine thing, which has to finally be resolved. And you ultimately have China. That's a key part of this, whether it's because of the oil, whether it's because of Taiwan. There's always that lingering kind of fear out there that China's going to do something as well. And so I support Jamie Dimon. I think he's brilliant. I think his comments are great. I think he's just being realistic with saying to everybody, look, there's even if this deal happens, this ceasefire deal, there are other issues just kind of brewing under the surface that you just need to be aware of when you're making investments, when you're putting money to work, where you're putting it to work, and how you should consider kind of building a portfolio.
Well, I want to take a look at yields this morning because we had that strong March jobs report on Friday. And Maria spoke with San Francisco Fed President Mary Daly last week, who told her that the labor market is holding up. Watch.
This is just a good report that balances out some weaker reports we got in previous month. Overall, it tells us that the economy and the jobs market is staying steady. Somewhat lower than people might like if you look at sentiment surveys of workers, but still steady. And then good news on the unemployment rate is very welcome.
Meanwhile, it is a big week for economic data. The Fed's preferred inflation gauge, February PCE, that's Thursday. We've got the third and final read of fourth quarter GDP. That also is Thursday, Kenny. And then all eyes are going to be on March CPI Friday. This is the first report that reflects the impact of the Iran conflict. So the estimates are rise of 0.9% month to month, 3.3% year over year. Kenny, your thoughts?
Right. So listen, I think the CPI is clearly going to be what everyone's focused on, right? Because to your point, this reflects that since this conflict has begun. Now, it's not necessarily out of line. They've been preparing us for this number to rise a little bit, and everyone kind of expects that it's going to. It's going to really depend on, is it in line with the expectation, or is it even worse than that? That's going to be what they'll focus on, right? I think prior to that, the PCE number is going to reflect before, so that's not really going to be indicative. You're really going to have to wait until Friday. But I think most of the market is prepared to see that number go higher. It's just going to be, is it worse than even that higher expectation?
Yeah, well, certainly, I agree with you. I think that CPI report on Friday, all eyes are on that thing. Kenny Polcari, it's great to see you. Thank you for being here this morning.
It's great to see you, and thanks.
All right.